I'm Charlotte McLeod with the Investing News Network, and this is your quick look at the stories we covered this week that you need to read. We all know that online events have quickly become a mainstay since the coronavirus outbreak, with many experts in the resource space delivering advice and updates from their homes. This week I want to share a few of my key takeaways from webinars and other events that the INN team has attended recently. Speaking at the recent World Gold Forum, independent analyst Ross Norman suggested that the yellow metal could approach its all-time high this year, with negative real rates being the main driver. He also laid out 3 other factors that support a higher gold price in 2020. The upshot for him is that all signs point to improvement. In a webinar this week, Stacey of AGF Investments made the case that gold is at a tipping point and said that for those that don't yet have it in their portfolio, it's time to start thinking about adding it. Interestingly, he suggested that gold stocks are becoming more appealing as a portfolio diversifier because miners are shifting from exploration to execution. This shift away from exploration has been criticized by some in the gold industry who are worried about declining discoveries. But Stacey said that in his opinion, it's beneficial because it means that miners are improving their fundamentals. CPM Group also put on a webinar this week with the release of its latest Silver Yearbook. Jeffrey Christian and Rohit Savant both presented, with Christian arguing that we will see a deep recession this year. While he sees a recovery next year, he anticipates another recession from 2023 to 2025. For his part, Savant stuck to silver, saying that the white metal's narrow price range is the result of tactical investors buying on the decline and selling when prices rise. He expects this selling to become less aggressive moving forward. For our Twitter poll this week, we returned to uranium after the U.S. Nuclear Fuel Working Group finally released its recommendations for uranium mining and nuclear power. We asked our followers if the recommendations will be effective in restoring the country's nuclear energy leadership. At the time of this recording, the poll was still ongoing, but most had said it's too soon to tell. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Finally, in the marijuana space, cannabis advisory firm Viridian Capital Advisors said in its latest deal tracker report that capital raising activity rose for the second week in a row. It recorded 6 transactions worth a total of $61.9 million. Half of them were equity-based capital raises as opposed to debt-based financings. While cannabis deals are still down substantially from a year ago, Viridian sees positive signs in the sector. Notably, it said equity-based capital raises are on the rise, which may indicate that stocks are coming up off lows seen due to COVID-19. That's all for this week. Tune in again next week when we tell you more about what's going on in the resource and cannabis spaces. In the meantime, you can follow us on social media, subscribe to our YouTube channel, or click below for our free report or any article mentioned in this video. See you next time.